Oh, hey. So I have just began recording the meeting. So I gave you 2 minutes to answer this question. Pagdating sa CVP analysis, it's very straightforward kung paano nyo to natutunan nung ah, previous subjects nyo, intense in calculations. That's the way we do it in the CMA examination. So again, you have Cake Boutique with the following budget based on producing 10,000 chocolate cheesecakes. Revenue and cost items, as well as net income given. The question is the break even point in number of cakes. Enter your answers now. Enter your answers now, everyone. Enter your answers now. So the break even point in sales units is the total fixed cost divided by the UCM. It can be argued that your salaries and rent, they are fixed, while the rest, they are labeled as variable. Safe to assume they are variable. 349,500 minus the three variable cost divided by 10,000 chocolate cheesecakes. The unit contribution margin is 1957. 19.57. 125,800 divided by 19.57. You have 6429. Very good. The correct answer is letter A. Very good. The correct answer is letter A. Next, Jay's janitorial. I will give you another 2 minutes. Go. Okay, you still have a minute more. Just continue on answering. Jay's Janitorial is a franchise business that sells janitorial supplies to large manufacturing facilities. Mary owns a Jay's Janitorial location in Dallas, Texas, following costs associated with her business. Mary must also pay a 3% royalty to the franchisor on all sales. So meron siyang franchise fee for Jay's Janitorial. What is Mary's break-even revenue per month? Break-even revenue per month. Okay. 30 seconds more. Okay, enter everyone. Enter now. Everyone. What's the answer? Enter now. Everyone, please enter your answers. Ayan. So the correct answer is, check natin ha. The break-even point in sales revenue is the total fixed cost. This time, because this is sales revenue divided by CMR, contribution margin ratio. So the total fixed cost includes 7,275. Then you have 96 divided by 12. $800 lang kung i-prorate nyo monthly yung insurance. Salaries should be multiplied by 2. This should be 2,800. Okay? This should be 2,800. Kinsena kasi yung binigay, no? Per kinsena. So, the total fixed cost is 10,875. The CMR is 100 minus 10, 4, 37, and 3. 100% minus 10%, 4%, 37%, 3%. That's 46%. Your contribution margin ratio. Very good. The correct answer is boy. 23,641. $23,641. Okay tayo? Correct answer is boy. Very good. Sige. Ito, fast talk to. We'll give you 40 seconds. Go! Enter now. Enter your answers, everyone. Livingston Company has fixed cost of 60K. Contribution margin ratio is 30%. You're simply asked the break-even point in sales dollars. 60K over 30% is 200,000. Correct answer is letter A. Very good, everyone. Letter A, $200,000. Okay. Pag-isipan niyo ng maigi bago niyo sagutan to. Please think very well before you answer this question. When the corporate income tax rate increases, what is the most likely result? The most likely result. Go. Okay, think very well before you answer this question. Think very well before you answer this question. Pag-isipan niyo na maigi bago niyo sagutan to. Enter. Enter now. Enter your answers. When the corporate income tax rate increases, what's the most likely result? Walang impact sa break-even point. Letter C, there is no impact on the break-even point. C is wrong because at the break-even point, the taxes are also zero. Pagdating sa break-even point, zero naman yung taxes. Kaya wala kayong poproblemahin pagdating sa break-even point. However, pagdating sa target profit analysis, mas kailangan mong damihan yung benta para makuha yung gusto mong kitain. When the corporate income tax rate increases, the tendency is that whatever you earn before tax, you're going to receive less of the percentage of such amount. Kung mataas yung tax rate, yung kikitain mo after tax, mas maliit na lang. So if you have a fixed net income after tax target, no? After tax profit na target, gusto mong marating yung profit na yon, tumaas yung tax, mas kailangan mong damihan yung benta. Okay? The correct answer, very good, letter boy. Indeed, it's boy. The number of units needed to be sold to earn the target net income would increase. Tataas yon kapag tumaas yung income tax rate. Okay lang? Correct answer, boy. Ito, kaya nyo to. Okay, enter everyone. Enter your answers, everyone. Everyone, please enter. Lahat ba? May sagot na? Fin Products, a startup company, wants to use cost-based pricing for its only product. A unique new video game, Fin expects to sell 10,000 units in the upcoming year. Variable cost will be $65 per unit. Annual fixed operating costs, including depreciation, 80K. The balance sheet is shown here. What price on the new product is needed if Fin wants to earn 20% ROE? Tax rate is 25%. So we're going to add the total fixed cost plus the target profit before tax. If the return on equity is 20%, equity is 300,000 multiplied that by 0.2. we want to target a net profit of 60,000. However, no, however, matataksan pa tayo. If we are taxed at 25%, the 60,000 should only be 0.75 of the before tax profit. 60,000 divided by 0.75 is 80K. So again, total fixed cost is 80,000. Target profit before tax, that's 20% times 300K, 60K, divided by 1 minus 25%, grossing it up. The target profit before tax is 80,000. We would like to break even at 10,000 units. Okay? What price are we would like to meet the target profit rather. We would like to achieve the target profit at gusto natin makuha yung target profit at 10,000 units. So, ilipat ko lang to, SP minus 65 sa kabila. 80 plus 80 is 160K. Lipat ko si 10K sa baba. 160 divided by 10. SP minus 65 is 16. 65 plus 16. The selling price should be $81. The correct answer is letter boy. The correct answer is letter boy. Madali lang naman sa inyo, no? Letter boy yung tamang sagot. So for those who are asking kung paano yung CVP analysis sa undergrad, ganun pa rin dito sa review kung paano tinuro sa inyo. Hindi katulad ng finance, kailangan analytic, no? Pagdating sa finance, analysis, application, and evaluation yung kailangan. But when it comes to CVP analysis, things are just normal as it is. Okay? So I believe natutukan naman kayo pagdating sa CVP analysis. Bolger and Company. Bolger and Company. Okay, start. Okay, 30 seconds more. You still have 30 seconds more. Bolger and Company manufactures large gaskets for the turbine industry. Bolger's per unit sales price and variable cost for the current year are as follows. Sales price per unit 300, variable cost per unit 210. Bolger's total fixed cost aggregate $360,000. Bolger's labor agreement is expiring at the end of the year. management is concerned about the effect a new agreement will have on its unit break-even point. The controller performed a sensitivity analysis to ascertain the estimated effect of a $10 per unit direct labor increase and a $10,000 reduction in fixed costs. Based on this data, it was determined that the break-even point would blank. Enter your answers now. Enter your answers now. Ang pinakamabilis na gawin dito, calculate the break-even point before and after. Just calculate before and then after. Originally, it was 360K divided by 300 minus 210, $90. 360K divided by 90 is 4,000 units. After the change, 350K na lang yung fixed cost dahil may 10K reduction in fixed cost. However, we would like to see the effect if there's a $10 increase in labor cost per unit. Magiging plus 10 to 20 na yung variable cost per unit. $80 na lang ang UCM natin. 350K over 80 is 4,375. We are expecting an increase in our break-even point by 375 units. The correct answer is letter dog. The correct answer is letter dog. Ha? Okay, letter dog. Next, we'll have multi-product setting. Paano kapag marami kang mga produkto? Okay? In a multi-product setting, we must assume that the sales mix is constant. Yung mix ni product A kay product B, constant yun over our analysis. So let's say you're operating this stall in the market. Okay, you have various fruits and or vegetables, no? So sa isang araw, mapapansin nyo na may ratio ng sales units ng potato to apples, etc., to watermelons and grapes. Meron kayong makikitang pattern dyan. Okay? Meron kayong makikitang pattern dyan. We call that the sales mix. Okay? So to simplify our example, I'll just assume that there are two products. To simplify our example, I'll just assume that there are two products, apples and oranges. Okay? You have noticed this pattern. For every two apples that you sell, nakakabenta ka ng isang orange. Okay? For every two apples that you sell, nakakabenta ka ng isang orange. So if you're selling, let's say in a day, you're selling 3,000 fruits, 3,000 yung nabebenta mong prutas sa isang araw, 2,000 doon apple, 1,000 doon ay orange. Malinaw? Okay, we call that the sales unit mix. Now, the sales unit mix is not necessarily the same as the mix of revenues coming from apples and oranges. Say, for example, the price of one apple is 10 pesos. The price of one orange is 20 pesos. Just an example, no? 10 pesos ang isang apple, 20 pesos ang isang orange. So, sa dalawang apple na nabebenta mo, kumikita ka ng etneb at sa isang orange, etneb din, no? 20 sa 20. You would notice that the revenue mix is 1:1. So the sales unit mix is 2:1, but the revenue mix, equal yung revenues galing sa apple tsaka sa orange in a given period. It's 1:1. Okay ba? Excuse me ha, may gagawin lang ako. Excuse lang. Okay ba tayo? Were you able to absorb when we say sales mix? Pag sinabi nating sales mix, it can pertain to the mix of the sales units. In this case, 2:1. Okay? Sa isang araw, nakaka 3,000 ka na prutas na bebenta. 2,000 doon, napansin mo apple, 1,000 oranges. Okay? This is just a simplifying example, no? Assuming there are only two fruits that you are selling. But the sales unit mix is not necessarily the same as the sales revenue mix. For example, kung 10 pesos ang isang apple, nakaka-20 ka sa dalawang apple. Isang orange 20, nakaka-20 ka rin. So the sales revenue mix is 1:1. Magkaibang bagay yung unit mix tsaka yung revenue mix. Okay? However, both of them must be constant in our analysis, no? Hindi pa bago-bago every time we make an analysis. To perform break-even analysis and target profit analysis, if we would like to perform break-even and target profit analysis, we have to take the weighted average contribution margin figures. If we are to arrive at the weighted average UCM, okay, weighted average UCM, use the sales unit mix as the basis for the weights. Kapag weighted average CMR, use the sales revenue mix as the weights. Okay lang? Ulitin ko ha. Weighted average UCM, ginagamit natin yung unit mix as the basis for arriving at the weights. Pag weighted average CMR, we base it on the sales revenue mix. Let that sink in. Okay? Sige, one more time. When we are in a multi-product setting, there's more than a single product. An important assumption in CVP analysis is we assume that the sales mix is constant. Say, for example, 2 apples is to 1 orange. There are 2 units of apples every time you sell 1 orange. However, the unit mix is not necessarily the same as the revenue mix. Mapapansin nyo dito, kapag 10 pesos ang benta ng isang apple, 20 ang isang orange. So every time you sell 2 apples, you sell 1 orange. Parehas silang 20 pesos. So if you are going to look at the revenues for the day, pantay yung revenues na galing sa apple at sa orange, kahit na magkaiba yung number of units. Now, when it comes to performing break-even and target profit analysis, we need to take weighted average CM figures. Weighted average UCM, it will be based on the sales unit mix. Weighted average CMR, it should be based on the sales revenue mix. Sige. Pag sinabi lang sales mix, tas ganito in-express, just assume it is the unit mix. Kapag sinabi lang sales mix, hindi malinaw, assume that it is the unit, no? Sales unit mix. I will give you 3 minutes to answer this question. I'll give you 3 minutes to answer this question. Ulitin ko ha, kapag sinabing sales unit mix lang, you assume it to be unit mix. Okay, everyone, please answer. Please answer everyone. Everyone, ha? Consider the following per unit data for Jennifer Company, a seller of both chairs and tables. Seller siya both of chairs and of tables. So you have here the selling prices, the variable costs, and the contribution margin figures. The question is how many tables and chairs should Jennifer Company sell to break even if fixed costs are $210,000. Now, I want you to take notes, no? Subukan niyo ang isulat kung anong pinapakita niyo. Kung anong pinapakita ko, rather. Please take notes of what I am demonstrating because it will organize your thoughts. Hindi lahat ng ibibigay ko dito gagamitin. Hindi kailangan lahat, no? Pero importanteng tutukan nyo. You will understand later. Game. Tables and chairs. So the selling prices are given. The variable costs are given. The unit CM are 80 and 15, respectively, given. Contribution margin, 80 over 200. Contribution margin ratio is 40% for tables. 15 over 50, it's 30% for chairs, no? 80 over 200 is 40% for tables. 15 over 50 is 30% for chairs. Sir, ba't kailangan i-calculate yan? Sa ngayon, hindi nyo kailangan. Pero gusto ko lang, i-organize nyo yung thoughts nyo. So maliban sa UCM, i-arrive nyo rin yung CMR. Now, if we are to arrive at the sales unit mix, it's already given. Mas maganda kung naka-percentage form para madali mag-multiply. 1 plus 4? 5. No? 1 plus 4 is 5. 1 over 5 is 20%. 4 over 5 is 20%. 80%. So 1 over 5, 20. 4 over 5, 80%. The sales unit mix can be expressed in this way. Instead of 1:4, para mapadali yung calculation natin, gawin natin 20% is to 80%. Now, paano kung gusto niya makuha ang revenue mix? Just for the sake of discussion. Just multiply the selling price by the sales mix. Just like what we did a while ago in arriving at 20 is to 20. No? 200 times 1 is 200. Sa bawat $200 sa table, nakakailan ka sa chairs? 50 times 4, also 200. No? 200 is to 200. Okay lang? 200 is to 200. So 200 plus 200 is 400. That is equivalent to 1:1 or 50% is to 50%. So if you're asked for the sales revenue mix, it would be 50-50. Pantay sila, no? 1:1, which is in percentage form, 50% is to 50%. Okay lang. Now, should you want to arrive at the weighted average UCM, use the sales unit mix as the basis for the weights. 80 times 0.2 plus 15 times 0.8, $28. Kung gusto niya naman ang CMR, 40% times 0.5, 30% times 0.5, use the revenue mix as a basis for weighting. 35%, your weighted average CMR. So ito yung mga weighted average figures natin. These are the weighted average figures of ours. Okay? So, if we are to arrive at the break-even point in sales units, it's total fixed cost divided by your weighted average UCM. 210,000 divide by 28. $210,000 divided by 28. That would give you 7,500 units. Accordingly, in our unit mix, 1:4, 20% is to 80%. In other words, 20% of 7.5 is tables, 1.5. 80% is chairs, 6,000. Okay? Breaking down 7.5 into tables and chairs, 20% ng mga units na to, tables, 1.5. 80% ng mga units na to, chairs, 6,000. Correct answer is letter A. The correct answer is letter A. Next question. Next assumption. So, let us say for example, that the weighted average UCM, cannot be arrived at. Hindi binigay yung sales unit mix. Hindi rin binigay yung, yun, kulang, no? Kulang yung sales unit mix. Pero, binigay naman yung revenue mix. Hindi binigay yung sales unit mix, pero binigay naman yung revenue mix. Ano yung pwede natin gawin? Assuming wala ang mga given na to. Let's assume that this is not given. What can we do? Okay, what can we do kung hindi binigay ang UCM data? We can arrive at the break-even point in sales revenue instead. Total fixed cost over weighted average CMR. Weighted average CMR. $210,000 divided by 35%. $210,000 divided by 35%. That would give you 600,000 in dollars. No? $600,000. Okay lang? Ngayon, paano natin i-breakdown to sa tables tsaka sa chairs? Dito papasok yung revenue mix. Dahil naka-sales revenue ito, i-breakdown natin to 50-50. 300,000 coming from tables, and then another 300,000 coming from shares. Malinaw ba? Malinaw ba? O, paano natin makuha yung 1,500 tsaka 6,000? Divide the revenues by their corresponding prices. 200 yung bawat isang table. 50 yung bawat isang share. 300K over 200 is 1,500 units. 300K over 50 is 6,000 units, giving you the same answer. Letter A. Does anyone have a question? Does anyone have a question? Meron ba kayong mga tanong? Okay. I will assume everything is clear, ha? I will assume everything is clear. Kung wala talaga kayong mga tanong. Okay na tayo? Patuloy ko na, ha? The correct answer here is letter A. Sige nga. What about this one? What about this one? For this problem, I would like you to perform both approaches. Yung derecho, break-even point in sales revenue agad, tsaka yung backdoor, no? Idaan nyo muna sa sales units, tapos work your way back to sales revenue. Okay lang? Sige. 3 minutes, go. Okay, everybody, please answer everyone. Please answer everyone. So you have here Shelty Company sells both lumps and keks. Consider the following per unit data. So you have here the selling prices as well as the variable cost, UCM, and sales mix. Fixed costs also given. So if you did it right, the correct answer is letter C, 351,450. $351,000, 450. Okay lang? Letter C. Do you have any questions? Do you have any questions? So, ganun pa rin yung process kung paano natin ginawa kanina. I will be giving you an assignment. Okay, ano ang sagot dito sa Kaftur Company? Please take a screenshot. Please take a screenshot and try answering this one. Okay? So that would conclude our live session.